Jeff, Zach, thanks for joining me.
Hey,
Thanks,
Steve.
Steve.
Hey guys, in the news, this is actually a pretty big story this week. Blackstone invested 10 billion in multifamily. They acquired a private apartment income REIT, AIR Communities, which owns 76 rental housing communities in coastal areas like Miami, Los Angeles, Boston. $10 billion acquisition. They're planning on putting in another 400 million in improvements to the properties. The market is looking at this as a real sign of confidence in the multifamily sector and maybe a sign that investors are really going to start jumping back in big time into properties. Your thoughts on this $10 billion real estate acquisition from Blackstone and multifamily?
Well, I'd agree with what you said last about people jumping back in the market. Blackstone's one of the biggest real estate owners and developers in the United States, and they have great information. If they think it's time to buy, they usually don't get the timing wrong. So they're either slightly early, slightly late, or right on time, but it's all within like 1 degree, which means that you probably have seen the worst of it behind us, and you're going to see like a flood of money into the market. But the other side here is when you look at the number of units, I think it was 30,000 units. It makes the cost somewhere around 330,000 a unit for luxury units in top markets. Blackstone got a great deal. I mean, when we were looking at all sorts of different development partners and different developments and real estate in these markets, we were seeing that it was 600,000 a door. So they're almost getting 50% off when they're buying this. So not only did they jump in at the right time, but it looks like they got a steal of a deal. And when you said 400 million coming in behind it, I don't think rents are going to get cheaper, even if they got a good deal.
Yeah, I think I would probably agree with that as well. I think it probably is just a better indication that we probably did hit the highs of the rates, or at least you have a better idea of where rates are headed at this point, and they can make a better I guess pro forma analysis of the of what they're buying and how they're doing it.
Yeah, and I think there was a bit of an arbitrage opportunity here too, and
For
the
sure.
public REITs really got beaten up in the market, falling a lot. And there was always kind of this question of, are they getting the value accurately, or the private transactions getting the value more accurately? It was probably somewhere in between, but I think that created a real opportunity for Blackstone to buy the properties at really below what their true value was by taking this REIT private. Definitely a vote of confidence in the multifamily sector. Definitely also, I think we're seeing a lot of positive across the spectrum in different regions,
Yeah.
and also in the low end and the high end. So this is definitely a specific vote of confidence in the high end in some of those most expensive markets. But we're seeing a lot of stuff positive across the spectrum in multifam. So I think there's just one more proof point there.
Yeah, I mean,
Yeah.
I probably add to it just a little bit. An article related that when I saw that was talking about it said that BlackRock or Blackstone had did a deal or to purchase Tricon in which is based out of Toronto, and they had a 38,000 build to rent houses in the United States for adding more to it, that they see it, everybody else sees it, that there's a need for continuing the for rent or build for rent or multifamily properties as well.
Yeah, agreed. Thanks a lot, guys. Appreciate the insights.
I